Welcome to Behind the Veil, a video podcast powered by the national nonprofit media platform American Muslim Today. Don't forget to subscribe to American Muslim Today, where the headlines meet hard truth. The United States is reopening large-scale offshore oil and gas leasing for the first time since 2023, marking a decisive shift in national energy policy and setting up a direct test of industry confidence at a time of falling crude prices. On Wednesday, the Trump administration will hold its first Gulf of Mexico drilling rights auction, the opening move in a series of 30 lease sales mandated under the administration's tax cut and spending law signed in July. The scale of this restart stands in clear contrast to the previous administration, which had planned for a historically limited offshore program as part of its climate transition strategy. The Bureau of Ocean Energy Management is offering 81.2 million acres at a 12.5% royalty rate, the lowest permitted under the new law. This marks a sharp departure from the 16.66% minimum introduced under the Biden administration's Inflation Reduction Act, which directed a larger share of revenues to federal and state funds while slowing the pace of new exploration. The policy objective has now inverted. The government is lowering royalty rates to draw companies back into long-term offshore commitments at a moment when U.S. crude prices have fallen about 20% this year, dampening new investment across the sector. Yet pre-sale filings point to a restrained response. 26 companies submitted 219 bids covering 1.02 million acres, just 1.3% of what the government has put on offer. BOEM will publicly open the bids during a live-streamed event Wednesday morning. This contrast underscores the central tension driving U.S. offshore energy policy, a government accelerating supply expansion through regulatory incentives, and an industry calibrating investment to weaker prices, longer development cycles, and shifting risk. Offshore fields still account for about 15% of national oil output, but continue to lag behind shale basins, where development is faster and less capital intensive. The administration argues that advances in deepwater drilling will keep the Gulf competitive. The early bidding patterns, however, suggest companies are proceeding with caution, not scale. That's it for now. Thank you for joining me on Behind the Veil. If you value our public service journalism, please support American Muslim Today, a 501c3 nonprofit, by following us on social media at American Muslim Today or donating at AmericanMuslimToday.com. Before you go, don't forget to hit that subscribe button.